Welcome to this News Track special. There's been a dramatic downward revision of India's growth forecast in the International Monetary Fund's World Economic Outlook update. In April, the IMF had projected India's economy would expand by 1.9% in 2020-21. 2 months later, in June, the new projection suggests the Indian economy could actually contract by 4.5% this year. To talk about the unprecedented crisis and the uncertain recovery, I have with me, live and exclusive, the Chief Economist of the International Monetary Fund, Dr. Gita Gopinath. Dr. Gopinath, welcome.
Hi, Rahul.
In April, you had put out what was supposed to be an annual growth forecast. Within 60 days, you've had to review it substantially. Could you start by explaining the massive downward revision? You now think India will grow minus 6.4%, less than what you thought in April. Why?
So, Rahul, there are two main reasons for it. One is that the duration of partial lockdowns are now longer than we had anticipated in April, and so that's one factor for the revision. And the second is that the health crisis has not abated despite the containment measures. And so looking forward, we expect now a slower recovery with much more persistent social distancing into the second half of this year. So these are two of the main factors behind our downgrade.
So in April, India was one of the two countries, along with China, which was shown to be in positive growth territory. You've now brought India into negative growth territory. How does the Indian economic outlook compare with what's happening in other countries?
I think it compares very similarly in the sense that we have very large negative growth projected for almost all countries in the world. I mean, China is quite the exception. For instance, if you look at our numbers for, instance, for advanced economies, that group as a whole is projected to contract by 8%. And so, this is a major contraction, it's the global crisis, and all countries are being hit in very big ways.
What do you make of the economic package that the Indian government has come up with? And how does this compare, in your view, with what other countries are doing in terms of how efficient and effective you think this is?
If you look at the aggregate set of reforms and measures, so if you look at, for instance, the fiscal side, the monetary side, and the financial sector support, then that is quite substantial. We think the measures being made on the financial sector front in terms of providing liquidity, the more recent measures about providing liquidity to NBFCs and housing finance corporations, similarly, making credit available through risk mitigation measures on the banking side. These are helpful. If you look on the fiscal side, India has done more on what we call below the line, off budget spending as opposed to on budget spending. So it's about 4.9% of GDP below the line and 1.5% in terms of on budget. And so here we think that some more can be done. India has the ability to do more in terms of on-budget spending, especially for very vulnerable households, for the poor, and for small and medium enterprises.
So let's build on that, because at multiple places in your report, you refer to income support. Why do you think that direct income support is a key policy intervention in these times of dire stress?
Well, this is a crisis where people, especially those at the very low income category, are basically losing full livelihoods and not able to sustain, basic spending. And that's where the government has to play a role. And what we've seen in terms of what the impact of that is on economic activity, we find the multipliers to be very big, which means that by doing this particular measure, which is by putting income in the hands of those who really are on a hand-to-mouth basis, the impact on economic activity is quite substantial and positive. And so that's why it's very important to do it this time around.
So India has avoided going in for a Nyunatam Aay or Nyay-style income transfer program, preferring instead to focus on trying to revive demand. What do you make of India's revival strategy and the focus on trying to revive demand as opposed to give direct cash in the hands of those who've been dispossessed?
So Rahul, this putting direct cash in the hands of those who are dispossessed is precisely a way of keeping preventing demand from collapsing. And so it is a demand stimulus, which is that you want to make sure that people can spend on, at this stage, at least on the most basic things that they need to spend on. And that's why it will have a positive effect on economic activity and will help with the recovery going forward. And that's what we've seen around the world for economies that are reopening, that when you have this income support that's provided, then you start seeing spending by the lower income categories respond very quickly. And since they tend to spend almost all of the money they receive, you get a big hit on activity. So this is a demand side measure that would help.
So we've heard from the likes of Dr. Abhijit Banerjee, Arvind Subramaniam, Raghuram Rajan. I'm curious to know Gita Gopinath's take on how much do you believe the Indian government has the capacity to transfer cash into the hands of those who will need such a cash transfer? Do you have a calculation that you've done, back of the envelope calculation, about how much each person or each family should get?
I think this transfer will take both the form of cash, and it will also be in kind. So I don't have a specific number for you, but we absolutely see that there is space to do more on both those fronts in terms of in-kind support, but also in terms of cash support. And yes, from a medium-term perspective, it's very important for fiscal consolidation. And India has gained the reputation over the past years of keeping its eye on the fiscal deficit, which means now is the time for it to, use some of that to be able to do the needed spending. I mean, across the board, countries around the world are spending by very large numbers. I mean, and everybody's fiscal deficit is projected to go up. I mean, India, what we have as a projection for the deficit for India is around 12%. So those are, twice as large as a typical time for India. But again, these times call for the measures, because otherwise the recovery will be even weaker than what is needed.
So how relevant are fiscal deficit numbers at this time? Do you think it's just time to junk them, which is essentially what you're suggesting, and focusing on getting economic activity restarted? The other contra thinking is that if you put out all the money that's in your treasury right now, you don't know how deep this crisis is and what else is around the bend, and therefore hold back some ammunition. This is something we've heard some policy thinkers in government refer to again and again. They don't need to go all out all at once. Hold back some ammunition, you may need it later. What do you make of this kind of thinking?
So firstly, just to give you the example again of India, the numbers we have, we are projecting a deficit of 12%, of which, if, like I told you, in terms of the on-budget spending, it's about 1.5% of GDP. The deficit is projected at about 12% of GDP. So most of that is coming from a contraction in GDP and from a contraction in tax revenues, projected contractions. And so, these are times where fiscal deficits are going to go up regardless of what we see, what countries actually do in terms of additional measures. But in terms of the argument of spend now or save and wait for when you might need it even more, this is a crisis which is very front-loaded, which means that it's a crisis where the biggest, most severe effects that we have seen are now, and in first and second quarters of this year. So that's the time when the biggest hit to activity is happening, and it happens very rapidly. And similarly, the recovery can also then be quick if in case the support system is already in place. So I do think there is a strong argument to actually move now as to waiting until later.
What's your calculation about how much economic headroom India has, the Indian government has, to be able to push through the kind of income support that you're arguing so passionately in favor of?
This is a time where the spending is needed. I think everybody recognizes around the world that this is a crisis that requires large, substantial fiscal measures, targeted, of course. And like I said, in the case of India, India in the past has kept its eye on the budget. Now, of course, yes, the numbers move around, and sometimes it goes more than what was higher than what was projected in terms of the deficit. But still, relatively speaking, those numbers have been relatively well behaved, and so that is a reputation to use. And if you look at the borrowing cost of the government at this point, because of the fact that policy rates have come down quite substantially in India, and because you've had somewhat improved financial conditions the last couple of months, the borrowing rates for the government are now lower than what they were a few months ago. So, this is the time when the government has to play an important role, and it is certainly doing this on many fronts. So, in terms of an aggregate package, it is quite substantial, but I would push for a few more things along the lines I mentioned.
So you mentioned direct income support. You mentioned support for small and medium enterprises. The government has done a bit of that. What do you think of what they've announced in terms of credit support, liquidity support for small and medium enterprises? And you said a few more things. What else would you like to see, Dr. Gopinath?
I think what needs to continue, and given that this is a health crisis, this is of top priority, is on the health front. The health crisis is not over. The number of cases are continuing to grow in India. India on one hand has done exceptionally well in terms of contact tracing. If you look at its performance relative to other countries, it has had one of the most comprehensive contact tracing, and that's very good. But it needs more in terms of testing. If you look at testing per capita, it's in terms of international comparisons, it could certainly do more on that front in terms of hospital beds per capita, doctors per capita. Of course, these are more structural changes that need to happen. But I think more would absolutely be needed on this front too, on health fronts too.
Let's talk a bit about economic recovery. In your projections, what's the kind of recovery you're anticipating, Dr. Gopinath?
The economic recovery we're anticipating is going to be gradual. So the nature of this crisis is such that you have the lockdowns, and then as you reopen, you will see a spurt in activity, and you kind of will see that. But the strength of that recovery will the question is whether that will hold up. And our projection is that given that there is still no medical solution to this crisis, and that there will still be persistent social distancing that will be practiced de jure or de facto, and activities that, hospitality sector, leisure activities will remain subdued for a while, we're thinking of a slow recovery. So we are expecting even by the end of 2021, India's growth will, if you look at cumulatively, we're getting barely to pre-COVID levels.
Your projections last time, Dr. Gopinath, came in for criticism from the likes of Arvind Subramaniam, who called them overly optimistic. You've now had to revise them downwards. When there are so many unknowns in the fray, does it make sense to do projections at all? The chances of these going wrong are very high, with all attendant reputational consequences. You're a brave woman.
When you make projections, you have to be clear about your assumptions. I think it's, if you're going to criticize a projection, you have to criticize the assumption. And this time around, that's even more so. And in April, when we made our projections, we had made certain assumptions about the length of the lockdown based on government announcements, and at the state of knowledge at that point about how severe the pandemic would be in emerging markets, which there was some suggestion that maybe it might not be as severe. Now, what we have seen from the data is that the lockdowns are lasting much longer, again, based on government announcements, which is not something that one can project ex ante. And similarly, in terms of the containment of the crisis, there is new information there. I think what we should remind ourselves is what forecasts do is help tell the world as a whole how severe a crisis is. And that's what we did in April, which is we said this was going to be the worst crisis since the Great Depression, and it was going to be a truly global crisis, and that required the kind of large, substantial, targeted policy response around the world.
You're projecting for next year India's growth forecast at 6% after minus 4.5% this year. Can you explain what the Indian government could do to try and ensure that we hit this 6% next year?
So this 6% number comes about because we are expecting, first of all, recoveries in many parts of the world. Again, like I said, this is a crisis where the first half of this year was dramatic, deep contraction. And now, as economies are reopening, we're seeing a recovery, and sometimes quite quick. But again, there is uncertainty, and as we know, cases are going up again in parts of the world, and there could be second waves of lockdowns. I can talk about that later. But if our baseline holds up, then some of the growth just comes from the fact that you're starting from a very low base, and you're going to see a recovery. So again, if you just add up the numbers over over 2021, we're talking about the Indian economy growing by a little over 1% over the 2-year period. So it's not a dramatic recovery, but preventing a further contraction has to be important. And on that front, I think all the policies that are being done on monetary policy, financial sector support, fiscal policy will need to continue, and more might even be needed. I think in the case of India, one important vulnerability, besides the health vulnerability, is on the financial sector, because there were structural weaknesses there already, and this crisis can exacerbate those.
And there are concerns and lots of punditry around how the liquidity support and the credit guarantees that are being offered are actually just pushing the football down the line, and it could later turn out to be a massive mountain of debt. Is that a concern you share?
I think that's a concern for all countries actually at this point, which is that as long as the health crisis and the pandemics, the effect of that is relatively, short term, then these measures obviously pay off very well. But if on the other hand, we're thinking about now a prolonged period where liquidity problems are now solvency problems, and you can already see that for some sectors, then you have to quickly pivot to not doing that kind of support, which is not protecting firms necessarily. You're trying to protect workers, and you have to get them to move towards sectors that actually are growing sectors as opposed to shrinking sectors, because otherwise you're going to be saddled with a whole lot of lending that's basically now with insolvent firms.
China is the one country that the IMF thinks will stay in a positive growth zone this year. You're projecting a 1% positive growth in 2020 for China. Share your sense of how you think China's economy is likely to emerge at the end of this crisis.
So as of now, in terms of projections, so China is one of the largest economies, one of the large economies that has positive growth. Pretty much every other economy actually has a negative growth, and so they have done quite well. They have been quite successful in containing the virus very quickly and reopening. And if you see the reopening, it's underway in a pretty strong way. So we have China doing quite well this year and next year. And that, of course, bodes well for the global economy, too, because it is an important part of the global economy. But again, I think for China, one of the biggest risks are the return of a second wave of this crisis, of this health crisis. And this is, again, also true for other countries. And another important factor for China is that as long as the rest of the world is not recovering, it's hard for it to fully recover because, even though exports are now a smaller share of what it used to be for China, it still is a significant amount.
So this pandemic has thrown open the kind of risks global supply chains have if they're overly dependent on China. Do you see a part of the global manufacturing supply chains move out of China as a result of this pandemic, ma'am?
I think at this point, it's very hard to speculate on how much of the shift that will happen will be because of the pandemic. And some of it is, of course, that the fact that, as costs of production are going up in China, manufacturers will look elsewhere. But when you talk about global supply chains, these are not decisions that happen overnight. These are decisions that take time, in countries and companies and buyers and sellers invest in this on a much more long-term basis, and so. These changes don't happen very quickly. I think what we can see more generally, and this is not just China, but in other parts of the world, is some desire to maybe move production locally for some reason. Again, it depends on the length of this pandemic. If the pandemic we manage to deal with it in a shorter time frame, then the argument still remains that you want to locate production where the resources are the cheapest and the demand is the biggest, and so that would still stay.
How do you see the US-China trade war shape up over the next few months, especially as the US goes into an election cycle? President Trump seems to be running against China in some senses. And what impact will this have on global trade?
I think it's too early to speculate at this point of time on what is going to happen to US-China trade relations. I mean, the Phase 1 deal was certainly a good step that reduced trade tensions, and this is what happened in the last year, and that should hopefully be the beginning of a more comprehensive trade deal. But the trade tensions are a real prospect. Geopolitical tensions are a real prospect. And at a time when there is already so much uncertainty about the way the world economy is headed, those obviously will have a significant impact. And I think I should also mention that while there is a real crisis in the global economy, there is no financial crisis at this point. And that's because of the considerable support that policy has given. Now, when you have negative news which comes from any front, including trade tensions or geopolitical tensions, that can obviously jeopardize financial conditions and have an even worse impact.
There's a surge of economic nationalism in countries across the world. In India, we're hearing Modi government speak about Atmanirbhar Bharat, a self-reliant India. What does the International Monetary Fund make of the idea of an Atmanirbhar Bharat?
Countries around the world are clearly reassessing the gains from globalization or the benefits from globalization. I think what we have seen from study after study is that globalization has been extremely helpful to countries in terms of access to intermediate inputs that help them then produce goods that they can now export, and consumers have access to a bigger variety of goods by doing so at cheaper prices. Now, it obviously does come with a negative impact on some workers, and that's absolutely true. But the way to deal with that is through domestic policy as opposed to international policy, which is to make sure that you have a good social safety net, you have good worker retraining, ability to move, reallocate workers towards growing sectors. And so yes, I think much more needs to be done in terms of how globalization takes place around the world. But one cannot throw the baby out with the bathwater, which is that it has been incredibly helpful for ensuring a more productive world, and also for a world where we've had a reduction in poverty, an international convergence in income that has come about from it.
But all countries haven't benefited equally. India is now looking very seriously at the possibility of exposing trade barriers, especially when it comes to cheap imports for goods which can very easily be manufactured in India. The IMF has been one of the biggest crusaders for globalization. Some would say that this pandemic would accelerate the trend of deglobalization. What are your thoughts around this?
I mean, India has benefited tremendously from services exports. So it's when you say that the country as a whole has not benefited, I would seriously question that. But yes, I think there is no doubt, and this is true not just for India, but this is true even in the US, where there are some communities who were previously working in the manufacturing sector, producing goods that are now being competed out by foreign producers. And the solution to that, of course, is also important domestic policy support, because while on the one hand you have people who lose their jobs, you have on the other hand consumers who are able to afford kinds of things that they could not afford before because they're able to get it at much more competitive prices.
Well, this has been an interesting conversation. You've pushed very hard for income support. Now, whether you call this Nyaya, you call it direct income transfer, call it what you will, you're saying you have the economic headroom to be able to push ahead, and instead of holding back on reserves for later, you're saying the time to move is now. Front load help so that those who are dispossessed benefit from it. Dr. Gita Gopinath, for joining us with your revised outlook. Thank you very much. Tell us, is this the final revision in the world economic outlook, or could there be another one in a few months from now?
So tell me, Rahul, do you think this is the end of the crisis and that there's no more uncertainty left?
No, absolutely not. It isn't. So hopefully we'll have you back, but hopefully next time you'll be indicating upward revision rather than a forward, rather than another downward revision. But anyway, we'll see.
I hope so.
What happens. Thank you very much, Dr. Gita Gopinath, for joining us in India Today.
Thank you.